Intel, INTC, is trending after reporting Q4 2025 results that technically beat expectations but failed to reassure investors looking for near term acceleration. While the company delivered its fifth consecutive quarterly beat, the upside was overshadowed by weak forward guidance, particularly for Q1, triggering a sharp debate across the market about whether Intel's turnaround is merely delayed or fundamentally capped by structural constraints. On the surface, the quarter looks solid. Intel posted Q4 revenue of $13.7 billion, beating guidance, with non GAAP EPS of 15 cents versus an 8-cent guide. Gross margins also came in stronger than expected at 37.9%, about 140 basis points above guidance, while full year margins improved 70 basis points year over year to 36.7%. For Bulls, this marked continued evidence of cost discipline, execution improvements, and consistent delivery against management targets. However, sentiment shifted sharply once guidance hit. Intel forecasts Q1 2026 revenue of $11.7 to $12.7 billion, well below consensus, alongside 34.5% gross margin and break even EPS. Management warned that chip supply will bottom in Q1 before improving later in the year, a key factor limiting near term upside despite what the company described as strong underlying demand. CEO Lip Bu Tan struck a notably candid tone, acknowledging that manufacturing yields are improving but still not industry leading, reinforcing the idea that Intel's transformation is progressing but unfinished. Investors reacted negatively to the implication that Intel's ability to fully capitalize on AI, server, and PC demand remains constrained by wafer availability and tight DRAM/NAND supply, rather than customer appetite. That nuance became central to the debate. Intel emphasized that AI demand remains strong across AI PCs, traditional servers, networking, and custom silicon, with its custom ASIC business exceeding a $1 billion annual run rate, up more than 50% year over year, yet those gains are being throttled by supply bottlenecks, limiting shipments into Q1 and pushing revenue recognition further out. Operationally, Intel highlighted progress across key segments. Client computing, Core Ultra Series 3 processors built on 18A launched with 3 SKUs, delivering strong benchmarks and supporting 200 plus OEM designs. Server Atom, Granite Rapids, Sapphire Rapids, and Emirate platforms are ramping, while the server roadmap was simplified to Diamond Rapids and Coral Rapids, aiming to streamline execution. Foundry, 18A is now in revenue production, 18A PDK 0.5 has been released, customer test chips are underway, and volume production is targeted for 2028. Despite this progress, the market's focus quickly turned to what Intel isn't delivering yet: gross margins sustainably above 40%, consistent supply to fully meet AI server demand, and clearer timing on when foundry profitability meaningfully contributes to earnings. As a result, the community is split. Bearish, sub 40% gross margins remain a structural concern. Supply constraints are delaying AI upside. Competition from AMD, Nvidia, and TSMC remains intense. Near-term earnings power still limited. Bullish, demand is strong, constraints are temporary. 18A is real and shipping, reducing execution risk. Foundry and custom silicone optionality remains underappreciated, and government backing and strategic importance provide downside support. In short, Intel delivered a fundamentally mixed quarter: strong execution versus guidance and accelerating AI led demand, but capped by acute supply and margin limitations that pushed the inflection point further out. The sell off reflects impatience, not collapse, but it also underscores that Intel's turnaround is no longer about promises. It's about when supply, margins, and scale finally converge. That question, how long investors are willing to wait, is now front and center.
So the stock is down 11.82%. This is Friday, the 23rd of January 2026, pre-market session. So far, we are gradually getting to 800,000 shares. Its 50-day average is around 92 million. Who knows how big a day it will be today? Today, the 23rd. Okay, let's see. There was an indication or rather about options activity. Let's see what we have beginning with the February 20 series. Let's see whether there's anything here. Okay, we may not be able to get anything out. There's a lot of data on Intel. It's a big stock, so it comes with a lot of data, yeah, and a lot of things are running on this computer already, yeah. So yesterday it gained 0.13%. So they have, I think, so far this year alone, I think it has gained 47%. So this is looks like a well, I'm not going to say it's a buy the deep opportunity, but for some, without even looking at it, without any doubt, it may be a deep buying opportunity. Okay, so this is what we're looking at right now. Okay, as a matter of fact, I actually began to contract on Wednesday the 20th, 21st. Yeah. So, okay, well, the extrapolation on this 4-hour chart seems to be suggesting that it may continue to weaken up till the pre-market session of today. This is we are in the pre-market session, so an hour and a half before, so 8 a.m. New York time. It's saying that you might print a bottom right on its 40 period moving average and may bounce and hold the strength at least up till Wednesday the 20, at least up till Thursday the 29th pre-market session. Then after that, we might see a contraction. So all in all, you could just say that what is expected is just a consolidation up till the 30th of January as things stand right now. And projections are currently saying 57.28, 61.64, 64.34. Let's see whether we have any intraday lows so far. No intraday lows yet. The last intraday low it printed was 41.57. That was sometime maybe much earlier, much further back, sometime before the 14th of January. Okay, so what we could do is just quickly apply the market grid. Let's apply the price pressure momentum, the 10 period price pressure, yeah, 10 period price pressure momentum. It gives us the angle of attack of the um, 10 period moving average on this chart. So the stock is the 10 period moving average dropping at a rate of $2.5 every day, every 4 hours. Yeah, it's a theoretical indication. The way it is dropping now, this is what it's indicating. However, you can see the derivatives are robustly bullish. They are robustly bullish. You can see that, even though they have decreased. So buying pressure, selling pressure is there has kicked in. It's affecting it, and the pace. The people are trying to buy, but they are not. Selling pressure is getting on. It's affecting them. It's limiting them, but they are buying anyway. They are buying this deep anyway, but not as strong as they were doing before. Okay, so let's have a look at um, the market grid. It will give us a range of possible prices. Okay, yeah, we have even lower prices still very much possible. Yeah, we have here between it's currently at 47.29. So this is where it is right now. It's now in the support zone. So 46.53 is something that can happen, even as low as 44.79. Okay, that will be a stretch, but it's something that can happen. It has now broken through its 40 period moving average, and the algos was suggesting that it might pick up a bounce there. We'll see how it goes. That moving average is saying That moving average is at 47.70. It's currently at 47.3. So, well, we'll see whether it's going to rebound, pull up, yeah, rebound, and reverse the this downtrend as the algo seems to be suggesting that it might do. But we have, based on what we are looking at right now, let's see where the supports lie. We have these are supports. The prices down here are below it are supports 46.53 are supports, but some are reinforced by being reiterated somewhere. Yeah, let's see. 47.7 is one. Let's see whether we have yeah 47 point yeah okay. So I think as a matter of fact we have a what looks like a resistance at 40, between 47.44 and 47.70. Yeah, and that's where that moving average lies. That's the 40 period moving average lies. Okay, we'll see how all of this will pan out, and people are surely watching. They are, the Argos expected dip to happen, a rebound to happen. You know, nothing has fundamentally gone wrong with Intel as things stand right now. So see what you make of Intel stock, and we'll see how all of this will pan out. And I'll continue to update you. Thank you very much for watching this video.